I'm Charlotte McLeod with the Investing News Network, and here today with me is Peter Krauth, author of The Great Silver Bull and editor of Silver Stock Investor. Before we get started, just a quick reminder that if you enjoyed this interview, make sure you hit the like button and subscribe to our channel. Peter, thank you so much for joining me today. Great to see you.
Same here, Charlotte. It's a pleasure. Always fun speaking with you, and looking forward to our chat.
Yeah, really great to have you here as always. And of course, today the focus is going to be on your new book, The Great Silver Bull. So we're going to start off with a pretty, easy question, hopefully, which is, I like to ask this whenever I'm speaking to people who've written new books. Why did you think the time was right for this? What made you think now is the time that I need to get this information out to people?
Well, hopefully that is, at least for me, an easy answer. I do think that silver is an amazing opportunity. If you look around at the investment landscape and you consider all your investment options, different assets and different sectors, I think you'd have a very difficult time finding any asset that is more undervalued, a better buy right now than silver is. And it does go through long bull markets. It is a volatile type of asset. But at this point, and I certainly make a point of explaining that in the book and in various stages, but it's very, very undervalued. It's very difficult to find a better value for your money right now. And silver is definitely the place for that.
Perfect. And we're going to be getting into those concepts definitely in more detail. So in your book, you've packed a lot of history into it, really tracking the events that brought us to where we are today and why you think we're heading for a global financial reset, not a return to normal, post-COVID. So let's start there. I want to ask, for you, what was the tipping point where you looked at what was happening and thought, this is out of control. We're not going to come back from this?
So that's kind of interesting. I'm glad that you asked, because that is kind of like a pivotal point in the sense, I'm not the only one who's often heard about things like helicopter money and, overprinting and modern monetary theory, all these concepts in finance. But in particular, helicopter money and modern monetary theory, I feel that although it may not be an official policy at this point, I do feel that modern monetary theory kind of was accepted and it kicked in after the global financial crisis. And, although and that's basically printing to fund deficits, government deficits, and not worry about inflation or the effects of inflation, and that there are technically, academically, ways that you can deal with that. The other aspect of it is the helicopter money, which is a concept that was highlighted by economist Milton Friedman going back decades. But it was something that Ben Bernanke, the former Fed chair, did talk about a few times. And the appetite for dealing with crises, I guess financial crises, was limited for something like that. But when I saw the reaction by governments worldwide, it felt almost like on a coordinated basis, the reaction to the COVID pandemic, the lockdowns, and then the stimulus and the support that came for people, that came for businesses and so on. It really felt like this whole theory of helicopter money had jumped from the textbooks to practice. And it's almost like I felt like this was meant to come at some point, but when it actually happens, you have a hard time believing it. But for me, that was a bit of what I call my financial epiphany. I have a short chapter dedicated to that. And when I saw that happen, I thought, wow, this is crazy. It's actually happening. And if we look at specifically what happened with silver around that time, both gold and silver in March of 2020 took a hit, bottomed within a matter of weeks, a couple of weeks, and then soared. But gold was up 38% from its bottom, and silver was up 152% from its bottom. And so it outperformed gold in that environment by 4 times. And I thought, like, this is the launch of the acceleration phase for silver. It's really moving into a new phase. for it to have bottomed at $12, certainly that was a low number, but that was 3 times the low of 2001, I believe. And so I felt that if it's bottoming at that much higher than, you know, the start of the secular bull, then this is going to be a mid-cycle bottom, and that we have much, much higher to rise. And if you think of today's prices around $21, $22 versus that $12 low, we're still at almost 100% higher. So all of this, for me, I factored all of those things in, and I said, you know, I have this knowledge on silver. I've been researching and writing on this market for such a long time. Let me take all of this, put it together in one place, and provide the background, provide the outlook, and you know, make that available for people to review and to make their own minds up about what I feel is really a generational opportunity.
Yeah, and let's talk a little bit more about silver's role in this scenario. So you've outlined, what may be coming, and I agree that it's definitely hard for people to grasp that because it's hard to understand what does it look like? Is this really going to happen? So, let's talk a bit more about why we should consider silver because, silver has a very, loyal contingent of people who believe in it, but it's also known for its volatility. You might want to choose gold instead. So let's get into that.
So, you know, a couple of, I guess, things to look at regarding that is that silver, if you compare it with gold, there are a lot of similarities, but certainly there are several differences. One of them is that over half of silver demand every year is for industrial applications. For gold, it's less than 10% goes to industrial. The rest is some form of investment. So with silver, it's about half of applications that are, I guess you could say, a form of investment. So that difference means silver has a higher utility. And in many ways, I've called it, the irreplaceable metal. And if you look at how silver is used today in things like solar panels, in EVs, in electronics, in medicine, and these uses are increasing every day. New patents, new discoveries, new applications are being discovered every day. And so my view is that the industrial application for silver, which is half of its uses, end up providing for a solid floor, a rising price floor under the silver price. And that will keep a relatively high floor that will continue to rise. And then I guess the marginal increase and the wild card in the silver price is the demand from investment. And so that certainly distinguishes silver from gold. Now, something else to keep in mind is, gold is certainly, I don't think there's anyone would doubt, it's the king of precious metals. If you look at from a supply side, the annual supply of gold is worth about $270 billion. And if you look at the annual value of silver supply, it's about a tenth of that, around $27 billion. So it's about a tenth the size of the gold market. And so needless to say, to push around the silver price is a lot easier through buying and selling. So it naturally is a more volatile asset, a more volatile investment sector. But, and I'm not the only one to feel this way, that the volatility shouldn't be something that scares you away. It should be something that in some ways attracts you, because especially as retail investors, we have an advantage. We don't have the same restrictions that larger fund money managers have in terms of amounts of capital they have to put to work and have to provide and keep liquidity concerns at top of mind. We can be more patient, we can be more nimble, we can react quicker. And so it's easy for us to look at quick moves in silver, whether that's downwards or upwards. And either if it's downwards, quickly add to a position or initiate a position in a stock that we find interesting, or if things have run up quickly, to start taking profits and to, as I say, play with that volatility, take advantage of it and have it work for you.
Yeah, I think those are great points. Volatility doesn't always have to be a bad thing. Another part of the book that really interested me was you've got this section on new silver investment trends. And I was really intrigued there because of the discussion on central bank digital currencies and the potential for silver backed cryptocurrency. I find whenever we talk about cryptocurrencies on our channel, there's definitely still resistance from the precious metals crowd. So I wondered if you could outline your thoughts there.
Absolutely. So if you think about the trend with digital currencies and cryptocurrencies, uh, I mean, the first, I guess, distinction that I'd like for people to make is that you have cryptocurrencies and then you have this sort of new developing sector of central bank digital currencies, CBDCs. And I have no doubt that central banks are absolutely as a group moving towards bringing in central bank digital currencies, that we're going to move away from physical money. What I find interesting, though, is that a lot of people don't seem to realize that they're they're not like, at the very least, not like Bitcoin, because of its cap in terms of the number of units that will eventually ever be created, is 21 million. So in that sense, it's a lot more similar to gold or silver, that it has a limited supply. Central bank digital currencies, I think, are going to be the absolute opposite. That central banks will, not only are they printing, like crazy right now, but central bank digital currencies will allow the inflation of the money supply to be even easier and even faster. So, and there's an interesting aspect that I added in there. There was an article in, I believe it was the Telegraph, not that long ago in the UK, that talked about how the Parliament in the UK were instructed to ensure that any digital currency that the nation would issue would be programmable, so that would ultimately potentially be the ability to determine what people are spending their currency on, to perhaps limit the kinds of things they can spend their currency on. And so that's certainly, a major erosion of freedoms, and I don't think that's something that people should look forward to, should encourage. And now the other aspect is the idea of perhaps precious metals backed digital currencies. And I think that if you look at where we're headed, if we do end up with some sort of a global financial reset, I do think that sort of thing, that sort of scenario will ultimately play out. You can't deny the advantages of cryptocurrencies in terms of the ease of use, the speed, the what we call, the lack of friction, meaning the low cost to doing transactions. And so I do absolutely feel like, on a technology basis, on a progress basis, we're heading towards digital cryptocurrencies. But if the reset, uh, takes away the faith that people have in currency because of the problem of inflating currencies, and they look towards something that has intrinsic value and that has proven itself, the precious metals obviously fit that bill. So for me, the combination of precious metals with crypto, I think, is going to be ultimately the answer. And if that were to catch on in a big way, in some way, then you could have, from one day to the next, a huge market for gold and silver to back cryptocurrencies. And I'm going to end sort of the thought on this little topic with an interesting note. At the end of, or at the beginning of March, I think it was, there was an article that talked about how the two largest gold-backed cryptocurrencies had combined reached a total market cap of $1 billion. So, and this was right after gold had reached about $2,000 after the Russia invasion of Ukraine. And for me, what it meant that you had people looking for both. You had people looking for, that were comfortable with crypto, but really liked the idea of the proven intrinsic value of gold. And so they had the comfort with crypto. They saw the value of gold, and the marrying of those two into those gold-backed cryptos attracted people, and so they bought it in spades. And as I say, if you add the two together, $1 billion market cap in just two gold-backed cryptos, that really, to me, sent a big message of where this sector may ultimately be headed.
Yeah, very fascinating. That will certainly be an aspect to watch moving forward. I don't want to spend too much time on supply and demand because that could be really its own whole conversation. But on the supply side, I think it's always interesting to remind people that there are so few primary silver mines. Silver is often produced as a byproduct. In your book, you touch on the concept as well of peak silver. And I think when you talk about peak anything, that gets people really excited. So I wondered if you could just go into that a little bit and give people a taste of what you're referring to there.
Absolutely. So when I talk about peak silver, I talk about peak mined silver. So silver that comes from mining, because you have roughly about 20% of the annual silver supply is from recycling, and the other 80% comes from mining. And so you rightly pointed out, Charlotte, how silver is a very, what I call a quirky, has a quirky supply profile. That's absolutely one of the chapters. And so only about 25% of silver supply comes from what we call primary silver mines. The other 75% roughly comes from mining other metals, things like gold, copper, lead, and zinc. And so even if the silver price rises and rises substantially, a lot of the miners that, especially those that produce silver as a byproduct, they're less motivated to try and somehow, not that it's easy to try, crank up a mine and produce more of anything, but to increase their silver output is not so motivating, because it's almost an afterthought. It represents a small portion of their revenues. And even those that maybe produce silver as a primary metal often need to see the silver price rise, stay high for as much as a year or a couple of years before they feel, okay, now this is a new normal. I'm absolutely now willing to look at making more investments or expanding my output in some way to benefit from the higher price. And so one last sort of little point about that, and it can actually work against the silver supply, is that if the price of silver rises and stays higher, some producers will say, well, now at this higher price, rather than continuing to produce from the same area of the mine where I have higher grade, I can actually produce from an area that I have lower grade and make the same profit because the price is higher. So that may actually decrease the silver output, exacerbating even higher silver prices because the supply falls as the price goes up. So as crazy as it may sound, you could end up with that kind of scenario, and that's extremely bullish for silver.
Right. And definitely we need to talk about prices. So you've spoken to us before about, the case for triple digit silver. And in the book, you reiterate a call for $300 silver in the next few years. I wondered if you could briefly go into that for people who haven't heard about it before and outline the thinking, because there is mathematics behind that, and it also ties into where we may see gold go. So if you could just go into that a little bit.
Absolutely. So I guess there are several examples that I have that's kind of a key chapter. In fact, it's one of the longer chapters, but I do make a point of going through, the aspects of that rationale and how I get to that number. And the fact is that I get to that number in multiple ways. And what's interesting for me is that as I was doing my research, and this goes back over several years already, is that I would get to that $300 forecast for an ultimate high in the silver price in different ways. So it meant more to me that I arrived at that in different ways. So one of those ways is to look at the gold silver ratio. And if we look at what happened in the 1970s, and that's the best sort of full cycle silver bull market that we have to compare to, silver went from $1 something to about $50, and that was a 3,700% return. However, if you look at the gold silver ratio during that time, when silver peaked, which was about the same time that gold also peaked, But because silver had gained so much over gold, by the way, silver always outpaces gold in bull markets. So that's something else to keep in mind. But so silver had outpaced gold dramatically up until the beginning of 1980 when it peaked at $50. And the gold to silver ratio, which is basically a calculation of how many silver ounces it takes to buy one gold ounce, that ratio had bottomed at 15, meaning it took only 15 ounces of silver to buy one gold ounce. And so nobody knows, will the ratio ultimately bottom at that level again? Perhaps. I wouldn't assume that, but I would assume that when silver peaks, it will be because that ratio drops to some ultimate low again, and some marked low. The closest we've had so far was in 2011, in April 2011, when silver once again was close to $50. It peaked at $49 and the ratio dropped to 30. So right now the ratio is at 80. I think that gold could reach relatively easily $5,000 in terms of a peak. That's only 2.5 times about where we are now. And so if gold were to reach $5,000 and we were to have a bottom in the ratio of 15, that would imply $333 silver. So that's close to 300. I, went a little bit below, and in terms of my forecast. And then if you look at, which I think is also, in fact, quite realistic. I'm not the only one. The book, provides examples from many others, respected people who've researched and analyzed the gold market, and they believe that gold will ultimately peak at $10,000. So if you were to take $10,000 and divide it by, let's say, a bottom in the ratio at 30, that would still give you a $333 price for silver. So once again, you arrive at a 300 plus silver price. And I go through several other examples in the book as well, but that's one way that, or a couple of ways that you could get there.
Yeah, and I appreciate that there are multiple ways to arrive at this answer. You point out that you're not the only one saying this. I think that really helps to build the case there. Now, so we have an idea of what could be coming for silver. And of course, the question for investors is how can they get involved in this? And you have a nice chapter which lays out a blueprint on, how to build your silver portfolio. And what I like about it is it's not, to be clear, it's not a list of stock picks or things like that. It's, different types of investments that you can kind of slot in your own choices there. So I think that that's really important. I think that often that's what people are really looking for. So I wanted to ask you to touch briefly on that, walk us through what people should know.
Sure. So yes, I agree. You're right. That is important. And people should not feel that, as we said earlier in the call, in fact, that although silver is volatile, that, because of that, that it's something that they shouldn't participate in or that they should dismiss. There are a lot of ways that you can be involved in investing in silver and silver related investments and, minimize your risk. If you want to, let's say, stay on the lower risk end, certainly physical silver makes perfect sense. I think everyone should have at least a small allocation to physical silver. And actually, let's back up for a second. I think that I'll give and this is my, ideal blueprint for a silver portfolio. So I would allocate 2 silver investments. I would allocate 10% to physical silver, 50% to the larger silver companies or plays or silver mining ETFs. Those are the lower risk ones. And then from there, 20% to the mid tiers and developers, and then another 20% to the junior plays. So that's a quick overview. If you want to participate and take less risk, I can give you a couple of examples. I mean, in 2001, from 2001 to 2008, Pan American Silver was up almost 16 times. I think it was at a low of about $1 something or close to $2, and ultimately peaked around over $40. So that is a tremendous gain over that time period, and in the second largest publicly traded silver stock you can buy. And so and that's over a span of 8 years. And yes, of course, there's going to be some volatility, but these are amongst the lowest risk plays that you can have. Silver Wheaton is another example that went from, I believe it was in 2005 to 2008, you had about a 1700% return. This is one of the lowest risk silver plays you could certainly find today. And then you have the ETFs that are instantly diversified, again, relatively low risk. And if you look at the other end of the spectrum, the junior explorers, I was saying that you should ultimately place not more than about 20% of your silver portfolio into juniors. I would split that across 5 names at a minimum. And ideally, I'm going to say across about 10 names to spread it out and have perhaps more potential to hit, I think, ultimately some 5 to 10 baggers, perhaps even some 50 or 100 baggers. That's certainly been the case in the past. I don't see why, if in the 1970s silver itself could return 3,700%, that you're not going to see some junior explorers absolutely rocket higher.
Okay, I think that's very helpful. Now, I can tell, I think that a lot of research went into the book, not that you didn't know a lot about silver beforehand, but it's clear that, you did a lot to put it together. So I wanted to ask if there were any things that came up along the way that surprised you about silver. Did you make any new connections when you were kind of putting all of this together?
I guess maybe one that stands out is how, and we talked about it at the beginning, is just how undervalued silver is. If you look at it from multiple aspects, in fact, again, that's something that in the chapter that deals with that, I look at the different ways that silver is undervalued, and that is using the gold silver ratio, using the inflation adjusted price. If you look at that alone, if you look at the non-adjusted non-inflation adjusted silver price, silver is still 50%, more than 50% below its all-time high. So on that basis, it's cheap. If you adjust that all-time high for inflation, and that's just using, let's say, conservative government inflation numbers, the silver price in 1980 would be, in today's dollars, about $175. So we are about 85 to 90% below that inflation adjusted all-time high. Silver is very cheap. If you look at it against housing prices, if you look at it versus the S&P, if you look at it versus the Dow, if you look at it versus other metals, if you compare silver with all the other major base metals, precious metals, and platinum group metals, silver is the only one that is still today below its 1980 high. Every single one of these other major metals is at least, I'm going to say 30 to 40%, and most of them are 100%. Some of them are 500-600% above those 1980 highs. So silver being at less than half, again, to me, unarguably an incredible deal, an incredible value. And the same goes for the silver stocks that obviously are, provide leverage on the price of silver.
Okay, very good. So we've kind of gone on a whirlwind tour through this book, picking out some of the interesting points, but there's a lot more in there. As we wrap up, I was hoping you could give us any final words on silver and, of course, tell us where we can find the book.
Sure. So, I call the book The Great Silver Bull, and that was not something that that's something I took some time to really think about. And if you read the book, I think you'll realize and come to the same conclusion that we are very likely going to experience the greatest silver bull market of our generation. I really feel that is the case. We are in an environment that is similar to the 70s, but an order of magnitude higher. The inflation, I don't believe we're going to be able to get under control the way we were able to in the 1970s. And silver just absolutely outperformed most any asset in that decade. Today, debt and deficits are, again, an order of magnitude higher than they were back then. We're likely at the end of a 40-year bull market in both stocks and bonds. And with rising inflation, huge debts that are continuing to grow, I think people really need to look for alternatives to stocks and bonds that already this year have both been down dramatically. It's very likely we're at the end of a 4-decade bull run in both of those assets. And so if you look for alternatives and you want some value, silver absolutely is the place to be. So that's kind of my last point. What I will say is that if anybody wants to look up the book, you can find it easily on Amazon. Just type in The Great Silver Bull, and I'm happy to say in its first week, it ranked #1 bestseller in its category, metals and commodities. And so, yeah, it's available in print and in Kindle format. And if you want to know more about my newsletter, you can go to silverstockinvestor.com and find out more there.
Okay, perfect. Well, congratulations on the book. We'll be sure to check in with you as the silver story progresses. As always, it was great to have you on.
Thank you so much, Charlotte. It was my pleasure, and glad we had a chance to chat about silver.
Yes, me too. So once again, I'm Charlotte McLeod with the Investing News Network, and this is Peter Krauth.